Hi everyone, welcome to Thursday where we do share and review. Today we're going to take a look at MicroStrategies under the ticker code MSTR. It is listed on the NASDAQ, which is one of the US stock exchanges. This is an inquiry that's come in off the back of doing Bitcoin and cryptocurrency last week, so more than happy to do that. Before I jump across and share my screen, just remember that this is educational purposes only. No way is it intended to be personalised financial advice. For that, you do need to go and have a chat to your own financial advisor. I'm simply showing you my methodology that I use when I'm evaluating shares to purchase. Let's take a look. Right, we've got MicroStrategies up here on the screen. Now, I am recording this on Tuesday, so it has traded in the US market overnight last night, and the US market now actually has 24 hours trading, and this is one of the shares that it's available on. So you can see for the trading day it closed down 2.06%. However, in the overnight trading it's up currently 0.27%. So that's something you do need to take into account when you are looking at evaluating any shares now that are on the US stock exchange. Just taking a look now, MicroStrategies had a share split, and that was back in around August last year. And what they did is they did a 10-for-1 split. So what that means is for every 10 shares investors were holding, they actually received one share back. So in effect, they're making your shares more valuable. So instead of having 10 shares, you've only got one, they then increase the value. And this is something that companies do as a strategy quite often to increase their share values. Now, I'm looking at this on Yahoo Finance, and something to take into consideration, depending on what share trading platform you're looking at in the charts, is it will depend how it evaluates the share. So on Yahoo, what they have done in the lead up to that share split, they've actually gone and revalued the entire valuation, if you like, of MicroStrategies as if the share split had already happened until leading up to when the split actually happened. It just gives a potentially more realistic view, if you like, as to what has been happening with this share. Now, with MicroStrategies, it is a very, very volatile share. It's incredibly speculative. They invest into AI, and they obviously use that to invest into cryptocurrency. Like it, whatever, that isn't completely your choice, but it's just a little disclaimer there to be very cautious with something like this. Let's put our moving averages on. First of all, we'll go to our 30. Yay, exponential's back. Right. As you can see here, the share is trading above the 30 exponential moving average. That is a good sign. Let's also pop on the 15 period moving average. Like I've said before, there's nothing spectacular or special about these moving averages. It's the ones that I use constantly. I don't believe in chopping and changing the moving averages that you're using because you will get different results. So if you're going to evaluate a share, I believe in evaluating them all in the same way. So MicroStrategies is trading above both the 15 and 30 week moving average. That is a good sign. You can see the moving average really, gosh, they were both tracking very similar, really leading up, and until it's sort of around that November, late 2023, and then that's when the share started to see some movement, which is good. We'll take these moving averages off, and what I want to show you is a trailing stop. So I'm selecting ATR trailing stops. Now I use this over a 21 period. So that is 21 weeks because I'm looking at it on a weekly chart. I'm doing that multiplier by 3. So you can see just in the grey here, the ATR over the last 21 weeks is currently sitting at about 44.65. So we're timesing that by 3. It brings up the buy stops and the sell stops. I'll just change that colour. Right, this is something I really wanted to show you. So as the share increased after this split, you can see the blue line. That too has increased. So that is where I would be putting my stop losses. You can then see it went through a sideways patch, and it obviously hit it at around sort of February this year. And what would happen then is I would have been stopped out of my share. Now, it's not terminal. You can get back into a share, but I do have rules around that as well. I want to make sure that if a share suddenly starts running again, I want to make sure that within the last 70 days, it's hitting a new all-time high. That's something that I put in place and will implement that if a share decides to carry on and run again. But you can see that it went through a bit of a sideways patch. In fact, we had a couple of weeks of quite significant falls. And then this blue line has appeared again. So what that's saying is if you were entering this share anywhere along this period here, which is sort of March-ish through to April, if you'd entered your share through that period, that is roughly where your trailing stop should be. So that's roughly around $258. So again, if that share comes down to that 258 level, then you would automatically be stopped out. If it continues to run, that's where, like through this period here, you would keep increasing your shares. Now, on the top side of that, you can see they have got red dots. Now, that's for people who want to take the opposite position. So they want to sell the share before they've actually bought it. So the opposite is you're going to have to do. You're going to have to put a stop in place as to where you would actually buy the shares. Because let's face it, if you did a short sell at around this period here, which was May to June 2024, then it suddenly ran to, and it's trading at $3.95 now. That's a lot of risk. You would have lost over $230 round figures per share. So that's what I mean by having those stops in place. Now, the thing to remember as well is if you are short selling the market, so in other words, selling the share before you own it, you can only ever write a share down to zero. So $395 down to zero. If you are owning the share and chasing it up, which hopefully is what we want to happen, then the return can be infinite, okay? Downward side, it's finite. Upward side, it's infinite. So that is something that I always look for. I want to look for shares that have good potential to run and have upward growth, and I definitely use these trailing stops. And I know I've gone on about it a little bit in this video, but I believe it's extremely important for a share like MicroStrategies. So anyway, we'll stop sharing there. I hope that's been of some value for you. Please let me know in the comments, and also let me know if there is any shares that you would like me to take a look at and review for you. Until next week, take care.